This is Josh Patrick, and you're at Cracking the Cash Flow Code today. And my guest today is Rocky Lalvani, and I probably massacred his name like I do everyone's. Rocky is a profit first consultant, and that was a book written by a friend of mine named Mike McCallowitz. And Mike is a very cool guy and a very cool system. And I thought it'd be really worthwhile bringing in actually a real profit first consultant on the show so we could talk about how it works and how it might help you create a construction company that will provide personal and economic sustainability. So instead of me yammering on, let's bring Rocky on. Hey, Rocky, how are you today?
I'm doing well, Josh, and you did well with my name, so thank you.
Okay, well, it's one out of 1,000 times, so I'll take what I can get. So, so at any rate, Rocky, give us just a simple explanation of what Profit First actually is.
So I think a lot of people are confused. Profit First is not an accounting system. It's basically a cash flow management system that works the way entrepreneurs just naturally do their finances. So I'm guessing most of the people listening don't spend a lot of time in their accounting software, probably hate it, don't want to look at it. They spend more of their time looking at their bank balance. Some of them might be checking it a couple times a day. And this is a cash flow management system that is designed to work around somebody who behaves just like that.
Yeah, I kind of call it the envelope system for business owners. Is that a reasonable explanation, or am I way off on that?
Nope, that is a perfect explanation. And many times we use that same exact analogy, except we use bank accounts instead of envelopes.
Okay, so if I'm going to, I have let's say I'm a home builder, and I'm building houses, and I'm out there busy swinging hammers or actually running crews, not like swinging hammers. And and you were to walk in my office, and it's December when I have some time to actually talk to you. Uh, and I say, okay, well, explain to me what I need to do. What would you say?
So I'm going to give you the overview, but I know that certain people in the trades get paid in certain ways. And so we actually modify the system for them. So let's talk about the big picture overview. The big picture overview of what we do is all your money comes into one bank account. So it's very similar to what it is today, except we don't pay anything out of that bank account. This way, you can look at your bank account, and what we tell you to do is to do it on a regular basis, meaning once a month, twice a month, or once a week, but no more often than that. And you will see how much money has come in since the last time you did your allocations. And so that gives you right up front, if you're doing this in a natural rhythm, every time you look at your bank balance on the set day that you're going to do it, you're gonna know how you're doing, right? If you're used to $50,000 being in there from revenue and you look on that day and there's 25,000, you know you got a problem. If you look in there and 75,000, you know it's party time, right? It's that simple because you look at your bank balance and it tells you, "Hey, since the last time we did this, this is where we stand." And in between, you can look at your bank balance and measure how you're doing to what you normally expect to come in there. So you can make some extra phone calls and make some collections if you want, or go out and bid some more work. Whatever it is you need to do to hit your number that you necessarily need to hit. Now, once we hit the target day, what we do is we take a set percentage of money and we put it into a bunch of other bank accounts. So, one of them, especially for people in the trades and construction, might be a cost of goods account. So if you're doing a lot of cost of goods, we'll take a set percentage and we'll set it aside for cost of goods. So when the bill comes, it's easy to pay it. You have the money set aside. We'll set money aside for profit because this is, after all, profit first. So we pull our profit off the top. Then we put money aside for us because we're supposed to get paid, right? Not last, first. You're the business owner. I know most business owners get paid last. We try and pay you first so your spouse isn't screaming at you. you're in good financial shape so you can carry the burdens of your business. Then we put money aside for taxes because the IRS has guns and they come take it if you don't pay them. So we always like to make sure they're well taken care of. And then what's left is your operating expenses. And we put that aside. And that's what you need to run your business on. And now every dollar has a job within your business and you know what it's for and you can feel comfortable using it for that purpose. And it just creates a natural rhythm. It's pretty simple to do. You've got real time numbers, even if someone hasn't, gone through the books and put everything in where it is. You know, on your regular rhythm, what's going on. Do I have money in my accounts to pay my bills or don't I?
So the question I have, and this is always my question around profit first. I understand, doing a profit account and a tax account, and I'm going to pay myself first account and an account to pay trade, vendors. But what if that money left over after all those things goes out is not enough to run my business? I've got other bills that are more than what's sitting in that account. What do I do then?
You figure out what the hell went wrong, right?
Well, I mean, is it well that's a good long-term fix, but
Right.
for a short term, I've got payroll to make and I've probably
Hmm.
got rent to pay and maybe
Hmm.
truck payments to make. And if I don't have enough money, those folks aren't going to be very happy if they don't get paid.
They are not. So that now raises a couple of issues. Number one, do we need to go collect some revenue? Right.
Well, what if there's no revenue to collect? There's nothing that's owed me.
Then that means you're spending too much money and you need to
Yep.
do something about it. Now, you can
Yep.
steal from yourself in the short term, but you
Hmm.
are stealing from yourself and you need to know that. The advantage of profit first is what it's going to tell you is very quickly it's going to tell you if you're stealing from yourself. See, if we have a big pot of money, we don't know that we just spent our taxes. We don't know that I just spent my paycheck. We don't know that I just spent my profit, right? We don't know that I just spent the money that I'm supposed to pay for the lumber I bought last week that the client already paid me for. But by separating this, we know what our purpose of our money is. And if we're in that situation that you're talking about, that is pretty much the gut punch to say, hey, you're doing something outside of the norm. Your numbers aren't working. You need to take swift action.
That's a really, really good methodology you just came up with because the truth is you might have to steal money from one of those accounts. And you might have to do that for maybe 2 or 3 or 4 months, but if it goes after 2 or 3 or 4 months, you better be rethinking your business. And the reason for me is I've maintained this for a zillion years. I don't think businesses often go out of business because the business is a crappy idea or you're not very good at doing what you do. It's because you run out of cash.
Correct. You run out of cash. So think about this, right? We're still in COVID, right? As far as supply chains and everything else, we're still in COVID. You start finding out you can't pay your bills. One of the things you might realize is, oh, wait a minute. Two by fours went from $2 and something to $8, and I forgot to raise my prices, right?
I hope you're not that silly, but okay.
Oh, you would be shocked at how many business owners did not have escalation contracts in place, did not keep track of all of the changes in prices in real time, and might be bidding out jobs with old pricing. Or let's face it, a lot of us underprice ourselves, especially on our time and labor side. Where maybe you're saying, hey, this job requires 40 hours of labor, you bid 40 hours of labor, and your guys are taking 60 hours. Well, this is going to tell you that you've got a problem in the system. And so it's forcing you to really make tougher decisions, but it's giving you the gut check early. It's not late. For most people, they don't find out they have a problem till 6 months down the road. This is showing you you have a problem much, much earlier.
So if I'm doing this system, and I do recommend people do this system, by the way, and I'm hoping some of you will give Rocky a call after this show so he can talk to you about it. If I'm doing this system, I want to start off doing this once a week, not once every 2 weeks or once a month, because it's really important to be fast on it. If this was me,
It I think it depends how your revenue comes in. So we determine how you do this based on revenue flow. If you're a company that's getting revenue flow every single week, then yeah, you might want to start out weekly. If you're a company that's getting a large chunk of money erratically because you're waiting for a draw on a house or something, then you're going to do it maybe when you get the draw. It really depends. So I told you that there's some special situations. So
yeah,
some of my builders, they bill out 50, 40, 10, right? So they
yeah.
get 50% up front. So we take the 50% up front and we put it immediately into cost of goods and to cover subcontractors because we've got a pretty good idea that that's probably a pretty good percentage to cover my subs and my cost of goods. So I don't even touch that money in my business. When I get the 40%, I put that into my business and I use that to cover the business, the payroll, the overhead, and everything else. When I get the final check at 10%, we take that and we immediately put it into the profit account, right?
So the 40% goes into the tax account and all the
Owner's
other accounts.
pay and the OpEx and everything
Right.
else. And then the last 10% goes into the profit account. Because if you're not running at 10% profit or pretty close to it, you should start questioning how do we make our operations better? And it's
Yeah, sometimes
maybe
sometimes that depends on the industry. I used to be in the
it
vending
does.
business, and our best year we ever had was 5%. Not the best industry, but that was the truth of the industry at that time. That was a while ago. But at
Right.
any
And
rate, go
if
ahead.
that's the
Sorry.
case, then your number is 5%, right?
Yeah.
And that's
Yeah.
fine.
Yeah. So this system's been pretty much road tested for quite a while. And my experience with business owners is they're often underpriced.
Mhm.
So, how often, when you install Profit First in the company, do you find they have to rob Peter to pay Paul to make ends meet? And after going back and doing an analysis of why that's true, you find out that they've never tested pricing elasticity.
So usually before we even implement profit first, as I'm going through their initial assessment, which we do prior to even having them come on as a client,
Yeah.
I can tell them that up front. I can look at their margins and their numbers and their allocations, and I can tell them up front, "Hey, you've got a pricing problem." Like we can just see it in their books. If they've got good, clean, relatively reasonable books, we can tell if they've got a labor problem, meaning that the labor is what's crushing them. We can see a lot of these pain points up front, and we'll know that going into the engagement, and we'll immediately begin working on it. Now, I'm going to tell you something. Mike gives you percentages in the books. Nobody starts at those percentages. We start at fractions of those percentages. So we might start with a 1% profit bucket, and that's it,
Okay. Okay.
right? If you're struggling every year and you're not very profitable, we and you don't have to worry about taxes, we might start with 0 or 1% going to taxes. If you haven't been paying yourself, we might start with 1% going to your pay. This is not going to solve your problem overnight, but we're going to start building a habit and we're going to start fixing problems. And maybe in 2 months or 3 months, we double all your percentages. And then maybe a month or two later, we add another. This is a slow process. Mike says to go from where you are today to where you want to be, very well may take 2.5 years.
Yeah, that makes a lot of sense to me. I mean, Rome was not built in one day. That's one of our little
No.
mantras that we like to have around for that. So when somebody fails at profit first, and I'm assuming every once in a while you've had a client that's failed, uh, what is the biggest thing that causes the failure?
So there are different reasons for failure. Okay. Um, at the end of the day, w- top line, one of the biggest things up front is they didn't bring in the revenue, right? They expected to bring in X amount of revenue every month and they didn't pay attention to sales. And so there was a revenue drop. And yet you have all the overhead that you still need to cover. So that's
Hmm.
one major problem. Two, what we've talked about is they haven't maintained their proper margins and proper pricing. So they're constantly being squeezed. Three, we got sucker punched. All right. What that means is the guy driving your new F-350 totaled it. And now you got a 20 grand bill, right? You need to go buy a new truck. Like life happens, right? That these are the things that happen. You get sick, COVID. These are all sucker punches. I'm going to tell you something as a business owner, you're going to get sucker punched constantly. And over time, we like to protect for that. But in the beginning, that's usually what happens. And then you have the people who can't help themselves. They steal the cookies from the cookie jar.
Yeah, that happens too much, unfortunately.
Yes, it does.
So what happens, and I'm going to assume that this has happened once or twice. You walk into a company and start looking at their books and you start looking at their analysis and you say, boy, these folks have a lot of fixed expenses. And the fixed expenses are eating up everything plus that comes in the door. Now, having been around for a week or two, I have found that fixed expenses are not the easiest thing to go away. Do you have any good tips for people saying, okay, I've got too much rent, I've got too much in payables, I've gotten behind with my vendors, I'm at 90 days, I'm supposed to be at 30 days, I was at 15 days at one point in my life, but now I'm at 90 days. How do you help them fix those issues?
Again, that's why we said this takes 2.5 years.
Yeah.
If you've dug yourself into a hole, then that's where we have to get you undug. Now, here's I think the bigger part of the problem that occurs then. When you're in that situation, you're in panic mode, right?
Yes.
So what do you do in panic mode? You discount. You sometimes might discount more than your profit margin. So
Yep.
now, even though you got cash coming in the door, you're actually losing money on that job. So you're digging your hole further. Two, you take a client or a job that you really shouldn't have, and it crushes you. It crushes your people or it crushes you because, again, you thought you could get it done, but you didn't get it done. And the $10,000 job costs you 15.
Right.
And that happens.
Yeah.
So
Yeah.
I think it's taking a moment to breathe so that we don't make silly mistakes in the moment. We're not chasing revenue.
That makes a lot of sense to me. Something I would also recommend for folks who might be listening, just realize this, there is no such thing as a fixed expense. If things get dire enough, you can always go back and renegotiate. I tell this story when I had my vending company, I had a huge embezzlement problem that put me way behind the eight ball. We were at over 90 days with our suppliers. I didn't know where to go. Our bank line was tapped out. All that kind of horrible things that happened. And I said, well, I guess I'm either going to have to go back and renegotiate or go bankrupt. That was like the two things. I went to my biggest vendors and said, here's what we can do. We can term out what I owe you right now and pay you over 24 months and pay you COD going forward, or you can go bankrupt. The choice is yours.
Yeah.
And guess what they chose?
They take the money over time.
Yeah, I mean,
Yeah.
it was either get paid in full with interest, which they didn't like, but they would take it and lose a good customer, or have me go bankrupt and maybe get 10 cents on the dollar.
And that's true. The other thing is you can start selling assets you're no longer using
Yep,
to raise cash in the short term. There
yep.
there are a lot of ways to do this. I think it take is taking the moment to breathe and to think it through instead of panic reacting. I think when you take the moment to think it through, you come up with much better solutions.
That is that's such good advice, Rocky, is that, I notice that when you get really nervous or somebody starts coming after you, or, you just you freeze and your brain stops working and you don't see any options. And by just taking a step back and going for a walk and breathing, you often find when you get back that the solutions kind of jump out at you.
Mhm. Very
The
much
the
so.
other the other thing I would like to recommend to folks listening is that if you have somebody like Rocky working with you, that's your outside brain. You might be panicked, you might be stuck, you might be overwhelmed, you might be completely out of your mind. But if you have somebody from the outside that can look at this and say, calm down, I've seen this before. You're not out of options. Let's figure out what we can do together. And that's one of the big reasons to use not just a CPA firm or a bookkeeper. You really want somebody that's a little bit past that, and that's where Profit First comes in. I've been a huge fan for a zillion years. And, I just think that it makes sense to have somebody from the outside looking over your shoulder.
It does. Most people in the construction and the trades, the last thing they wanna do is look at their financial accounting. It's just not their forte. It's not what they enjoy doing. And so more often than not, they just ignore it. And that's where the problems come. You can't ignore maintenance, right? We get that.
Yeah.
This is financial maintenance. We can't ignore it. And if it's not your thing, then make sure somebody is doing it for you. Now, I think this is where people get confused. People think their bookkeeper's doing it. And the reality is your bookkeeper's not doing it. Your bookkeeper more app is just putting transactions in. Occasionally you get a great bookkeeper who's going to tell you what's going on. Most of them don't. And then your CPA is most likely a tax person. Their job is to lower your taxes. So they're going to come to you and say, buy a truck. They're not going to tell you that buying a truck is going to crush your cash flow and your cash reserves. They're just going to tell you that buying a truck is going to lower your tax bill and you won't scream at them when you see it, right? They've got their own incentives.
That makes
So
sense.
be careful of who you listen to and why, and understand what their viewpoint is. And that's kind of where I think we run into some of these issues. It's not that they're getting bad financial advice, it's that the financial advice that they're getting doesn't look at them holistically. It looks at a problem and it solves the problem while creating another one.
Yeah, that makes sense. Hey, Rocky, unfortunately, we have run out of time. And I'm really hoping that folks who are listening or watching this podcast episode or vlog or whatever we're going to call it this week uh, would love to get in contact with you to find out more about Profit First and how you can help them organize their finances. So, how would they find you?
So, if you're a podcast listener, my podcast is called Profit Answer Man, and all we do is teach all of these principles on the podcast. We have guests who've done it. We've got other Profit First professionals, and we've talked to people in the trades and show how they've had success. And the main website is profitcomesfirst.com.
Cool. I have two things I'd like you to do. And the first, you've heard me say a zillion times, so I'll say it a zillion and one times. Please go to wherever you're listening to this podcast and give us an honest rating review. And while you're there, subscribe. We want you to be listening. I hope you like this episode, and we have lots more that are just as good as this one. And the second thing is I've been writing a newsletter now for about 40 years. It started off on the mimeograph machine and now is delivered every Tuesday morning at 9 o'clock East Coast time to folks. And I call it Josh's Musings. It's what I ever happen to be musing about. It typically is something to do with what business owners can use to create a personal and economically sustainable business. It's really easy to get. www.sustainablebusiness.co/newsletter. That's www.sustainablebusiness.co for newsletter. Just give us your first name and every Tuesday at 9 o'clock, you too can get our newsletter. So this is Josh Patrick with Rocky Lalvani. We're at Cracking the Cash Flow Code. Thanks a lot for stopping by. I hope to see you back here really soon.